Welcome back. Still plenty of cues to watch out for, and let us welcome SP Tulsian of sptulsian.com. Good morning, sir. Well, first up, Mr. Tulsian, how would you approach ZEE? The numbers look good to you?
Lata, numbers are seen to be excellent, and in fact, if you take the call on the ad revenue, I think they have really surprised a lot. Growth of about 24% on a YOY basis, 22-23% on a QOQ basis. One may argue that yes, on a QOQ basis the base was low, but they have seen extremely well. And even if I come on the subscription revenue also, I think there is seen to be good comfort. So overall, very good beat on the numbers, and I think that will be received well by the market.
Okay, but this overhang of sale will not affect it. Your people will go by the numbers, you think?
See, Lata, in fact, this overhang of sale, in fact, I take this as a positive, because now if you really see the management con call also, they have said that they'll be able to, they are in active talk with one or two people, and they will be able to give the identify or finalize the name, or maybe shortlist the name by March end or April. So it's just a matter of valuation, because if you really take a call on an expected EPS of maybe about 22, 23 for next year, and you take that as a P multiple of 20, that is seen to be quite good. So I'm not taking this in any way as a negative. It's only a matter of the percentage that how much they will going to divest, whether 50% of their 44%, or they are, they can stretch it beyond further, maybe 75% of their promoter stake. And if that happens, that will be seen very positive, because once the new person comes in as a strategic investor, that will also, see the P expansion happening for the stock going forward.
Okay, Mr. Tulsian, good morning. The other standout performance came in from specialty restaurants. I mean, 24% revenue growth and very big push in EBITDA. Is this a stock still worth buying at this price?
No, Sonia, I won't be taking that, because I don't know how far it is sustainable. And in fact, this kind of business has never been able to see the sustainable growth, seen coming in, because the specialty restaurant have been struggling since they went public, and in fact, you have not seen any kind of improvement. So one quarter numbers cannot really be taken as a base for taking an investment call.
Mr. Tulsian, good morning. What about KPIT Tech? Again has disappointed. You think the stock will be punished today?
Yes, Anuj, definitely it will get punished, because there has been a big drop in the margin and the earnings, and I don't think that market is going to get like that. And yes, the results will be a big disappointment for the market today.
Okay. So I wanted to ask you much more about a stock that you like. IDFC First Bank, what is it called? IDFC First Bank is getting listed today. How would you prepare investors for it? What kind of a range, and at what level would you enter?
See, Lata, it is just the incremental shares or the new shares having allotted, of about 1,400 crore to the shareholders of Capital First, that those are getting listed. Otherwise, the bank was very much, on, because the old shares, which are 3 times of the new shares getting listed, were already being seen traded. So yes, we have been keeping extremely positive view, and in fact, maybe ahead of this NCLT orders, which came in the first week of December, we have been giving buy call on the stocks on preempting that yes, everything will sell through smoothly, and we have seen an increase of about 25-28% in the share price since then. But in fact, if I need to pick and choose one small bank, I'm not placing them in the category of Kotak, IndusInd, and HDFC Bank kind of stocks. But if I need to place them, along with Federal, DCB Bank, and South India Bank, probably IDFC Bank stands out, on top of the buying list. And I won't be surprised to see the share moving up further by about 20% from here on, because the provisions in respect to the infra assets have already been provided for. The focus will now be on the retail credit growth, which we have already seen extremely well in case of Capital First, and the book is going to incrementally rise. If you take the roadmap for the next 3-4 years, they've given a CAGR of 25% in the retail space, book rising to about maybe 1 lakh crore in next 5 years. So taking all this into consideration, you have a big comfort on the share price going ahead, even at the current price to book of maybe 1.2, 1.3. And I'm not taking an earning call at this stage, which may be seen at about maybe 2.50 rupees for FY20. But the kind of growth in the credit book, the quality credit growth in the MSME and retail will really be seen quite encouraging.
Okay, well, Mr. Tulsian, stay on. We have about 3 minutes left for the pre-opening rates to kick in. I want to ask you your thoughts on Reliance Industries as well ahead of numbers, but more on that in just moments from now. Take a short break and be back.